This is Optimal Finance Daily. Dividend investing will always beat a side hustle by Millionaire Mob with esimoney.com. And I'm your host and personal finance enthusiast, Diana Merriam. Now let's jump right into our next post and start optimizing your life. Dividend investing will always beat a side hustle by Millionaire Mob with esimoney.com. What if I told you there's a way to make money without working and make progress towards your retirement goals? Does this sound too good to be true? Well, it isn't. With dividend investing, you position yourself to increase your income and get closer to your retirement goals. Why dividend investing is right for you. Historically, dividend investing has been viewed as a risk-averse way for retired investors to be involved in the stock market. Not anymore. With the speed of news and information, dividend investing is by far the easiest, most efficient way to make additional income from the stock market. I've been enamored with the number of cool online tools associated with investing, whether that be zero commission brokerages, real-time information, automated trading, etc. The list goes on. But in the case of dividend investing, this couldn't be better suited for today's generation of investors. Building a dividend growth portfolio should be fun, simple, and stress-free. If you set up your goals the right way from the start, you should have a new side hustle income without the hustle part. How dividend investing beats a side hustle. A number of personal finance enthusiasts like me strive for income appreciation. You should too. However, there are several reasons why dividend investing will always take priority over side hustles. Number 1, the ability to kill two birds with one stone. Dividend investing is the only way that I know of to both earn income and get closer to your retirement goals. If you know of any other way, I'd love to hear it in the comments. When I reference your retirement goals, I mean that for every dollar contributed to your dividend portfolio, you should be that much closer to retirement. Dividend stocks will have a residual component outside of your income, so you can convert to cash value in a very liquid manner. Number 2, unlimited residual value potential. To expand on my first point, as you invest in a stock, you're investing in the future value of earnings at a price discounted today. Hopefully, if you set out a specific plan up front, you'll be in great shape to recognize significant earnings appreciation, thus leading to an increase in the stock price and dividends too. Let's look at one of my favorite examples. Nearly 70 years ago, Russ Gremmel of Chicago invested $1,000 worth of stock in Walgreens. He had a simple mantra: people will always need medicine and women will always buy makeup. Russ went into it knowing that he would own the stock for a very long time. In 2017, Russ turned 98 years old and realized that his Walgreens stock was now worth more than $2 million. He donated all of his stock to the Illinois Audubon Society. Be like Russ. Number 3, side hustles take a lot of time. They aren't called hustles for nothing. With dividend investing, you really don't need to devote a significant amount of time to monitoring your portfolio. Back to my point of technology capabilities in the information age. We have real-time information coming directly to our hands via our iPhones at any given moment. There is limited need to go scouring the web. With a side hustle, I've seen countless individuals think they're on the brink of achieving greatness with their new side hustle, but end up achieving marginal return for maximum effort. Don't get me wrong, I love side hustles. However, our time is precious. Spend it wisely, just like your money. Our single goal in achieving financial freedom is to increase our earnings on a per-hour basis. And dividend investing has some of the best earnings per hour spent out there. Based on my most recent dividend portfolio statement, I should earn $728 per year for doing absolutely nothing. I don't even need to invest more money to earn that income. I like to invest in dividend growth stocks, which means I should see that income increase over time. What happens if I continue to recycle my income and contribute to the dividend portfolio over time? Number 4, compound interest is the eighth wonder of the world. Oh, hey, compound interest. As Albert Einstein once said, quote, compound interest is the eighth wonder of the world, end quote. Side hustles have limited ability to generate compound interest. Yes, you can increase your clients or sell more products over time. As an established business, you can make the argument that you can reinvest that profit into your own business and generate amazing compound interest. Holding that aside, dividend growth investing with reinvestment is the single best way to maximize your total return over the long term. And number 5, a side hustle can go away. If you're going to retire early, or for a matter of fact, just retire in general, you'll need additional income beyond what is being inherently generated from your retirement accounts. Even more so if you like to retire early. A side hustle should make up a substantial amount of your post-early retirement income, but it can't be the only income. You must diversify yourself with income that will go on forever. Dividends can do that. I like to think of my retirement accounts as slush funds. They are true assets, but I can't rely only on them. I must build my income and assets now with the utmost urgency possible. Why dividend investing is suitable for anyone. Dividend growth investing can be done by anyone. In fact, you may be a lot better at it than you think. I'm a firm believer that investors that keep their strategy the simplest will eventually win the race. Here are a few pointers I learned during my days as an investor, investment banker, and finance monkey. Number 1, stick with what you know. Why would you invest in the next dog walking app when you can't get enough Coca-Cola? Number 2, invest in businesses you understand. If you don't know how it makes money, it's not worth being in your portfolio. Number 3, avoid the herd. Just because everyone loves Netflix doesn't mean you need to invest in it. Number 4, if it's too good to be true, it probably is. Someone promising that a stock is guaranteed to return 123%, or the next cryptocurrency is about to take off, pass on it. Number 5, do the opposite of financial pundits on TV. Remember, people on TV are often not inclined to give the best advice. And number 6, only you know your risk tolerance and your investment comforts. Stick with your gut. Do your own homework. You will end up in great shape. I love investing, so dividend investing gives me another hobby. It also helps me achieve a number of goals without being a significant time suck. To build your first and only dividend portfolio, find 20 to 30 stocks that you'd like to invest in. Scale into your investments over time. You don't need to be invested in all 25 stocks from the get-go. Next, set aside money to automatically be contributed to your portfolio and continue to reinvest all income and contributions into your portfolio, preferably on small dips in the share price. Dividend growth investing is a marathon, not a sprint. Be patient and have a plan. Finally, go out and enjoy your life. Learn something new, travel the world. There's a lot to learn and a lot to explore. You just listened to the post titled, Dividend Investing Will Always Beat a Side Hustle by Millionaire Mob with ESImoney.com. And I'll be right back with my commentary. Buy low, sell high. Buy low, sell high. It's a simple concept, but not necessarily an easy concept. Right now, high interest rates have crushed the real estate market. Prices are falling and properties are available at a discount, which means F.I.R.E believes now is the time to expand the F.I.R.E flagship fund's billion-dollar real estate portfolio. You can add the F.I.R.E flagship fund to your portfolio in minutes by visiting fundrise.com/OFD. That's FUNDRISE.com/OFD. RISE.com/OFD. Carefully consider the investment objectives, risks, charges, and expenses of the Fundrise flagship fund before investing. This and other information can be found in the fund's prospectus at fundrise.com/OFD. This is a paid advertisement. While I'm all about passive investing in the stock market and growing my money through the power of compound interest, I'm not all that interested in dividend investing. I invest in total market low-fee index funds, which still pay dividends that I reinvest. But dividend investing is a kind of stock picking that focuses on companies that pay larger dividends and tend to increase over time. Companies have several options for using their profits: pay them out as dividends, reinvest them in the company, buy back shares, or acquire other companies. While paying out dividends benefits shareholders in the short term, it comes with an opportunity cost because that money is no longer available for company growth. Focusing on dividend stocks can be seen as sacrificing growth for income. And as a long-term investor, I'm focused on growth. Additionally, when investing in a taxable brokerage account, you'll be taxed on those dividends every year, even if you reinvest them. Qualified dividends are taxed at 0% for those in the 15% or lower tax brackets. But for those in the 25% and higher brackets, taxes still apply. This can make dividend investing less advantageous for people with higher incomes due to the tax implications. From what I've seen, many buy and hold investors don't prefer dividend-focused investments because it's more beneficial to control income for tax purposes when drawing down on a portfolio. When you receive a dividend, you have no control over the size or timing of the payment, and 100% of the money received is considered income. That brings us to the end for today, though. Thanks so much for listening all the way through, and I'll see you tomorrow, as usual, where your optimal life awaits.